Hey, I'm Paul Perry.
I'm Kim Hartsock, and you're listening to The Wrap,
a Warren Averett podcast for business leaders,
designed to help you access vital business information and trends when you need it,
so you can listen, learn, and then get on with your day.
Now, let's get down to business. So today we're talking about something that a lot of business owners don't want to talk about, but they need to talk about, and that's fraud.
Absolutely. I mean, U.S. businesses lose billions of dollars each year to fraud, and we understand that business owners have less time to focus on all aspects of their business, their daily operations, when they are having to focus on the potential fraud that's out there, and they become very vulnerable. Luckily for our listeners, today we have Tammy McGoy out of our Fort Walton Beach office with us to talk about some of those risk factors and what business owners can do to kind of help minimize that risk. Tammy, welcome to the podcast.
Oh, thank you, Paul and Kim. And thank you for the opportunity to share my experiences investigating frauds. You know, as Paul mentioned, I'm a partner in the Fort Walton Beach office. And when I first started learning about fraud, I really had to train myself to think like a fraudster. Naturally, being a CPA, I have a certain level of skepticism, you know, when I'm doing financial statement audits. But when I became a certified fraud examiner and certified in financial forensics, I feel like the game had changed. Today, I investigate frauds, and I do help businesses address risk of fraud within their organizations, you know, to help them become less vulnerable. So thank you for the opportunity to speak today.
Yeah, we're glad to have you, Tammy. So just to get started, maybe it would be helpful to our listeners just for you to explain. I know there are several types of business fraud. Maybe you can just go over some of the main ones that you focus on.
Sure. Kim, generally what I see is surrounds the disbursement schemes where someone would receive funds through unauthorized disbursement methods. And we'll go over some examples. Probably a very good example is just payroll fraud in general. Payroll fraud schemes can be anywhere from one paying themselves additional pay, maybe writing an extra check during a payroll cycle. Sometimes one may pay themselves a bonus above their normal pay. Another example in payroll fraud is someone who may be coding more hours for not worked but getting paid, or taking vacation and not recording the vacation in the leave system. So payroll is a prevalent type of fraud that I see quite often. Another one is check fraud. Similarly to payroll, is where someone is receiving monies through unauthorized means. So an example would be, you know, writing a check to themselves and being able to get monies that way, or writing a check to cash and then, you know, taking the cash and using it for their own benefit. Some more sophisticated would be maybe writing a check to a fake vendor, or even sometimes it may be a legitimate vendor, knowing that they're paying it probably for more than what it is required, and then getting a refund and intercepting that refund when it comes back. So those are examples of like check disbursement fraud. Another example would be expense fraud. And we see this quite often where it's more of a reimbursement type scheme. Where an employee may be submitting reimbursement from their employer for items that are more personal in nature and not business related. So they're getting that monies that way. Or they may be using a company credit card for personal items and passing those along as businesses. So, you know, payroll fraud, check fraud, expense fraud, those are all really on the disbursement side, but I do see quite often. Another type of fraud, which is more difficult, but it does happen, and it's more of understanding relationships with your employees and vendors, but it has to deal with kickbacks. And kickbacks is generally off the books type of fraud, and where you're looking for, you know, potential relationships that may be unusual in nature. Maybe your company doesn't work for or pay a vendor a specific type of vendor, and having a payment go to that vendor might be a relationship or an unusual transaction that you need to look at. But kickback generally involves where the perpetrator has caused a payment to a third party, and then the transactions between that perpetrator and the third party occur. So it's off the books, but I have seen kickbacks as well. So again, Kim, those are just some general nature of disbursement type schemes that I've found in cases that I've looked at.
Now, Tammy, any listeners know that anytime I get an opportunity to talk about controls, I'm always going to bring that up. And I think this is a great segue, right? Because a lot of what you do from a fraud detection and a communication of fraud prevention definitely deals with controls and sometimes the lack thereof. So I think it's always a good meshing of those conversations. This next question for you, kind of somewhat loaded, what really causes the business fraud, and, how can a company determine their vulnerability? And I got to imagine what has happened in the last 2.5 years probably is not helping the situation, right? I've had lots of phone calls. I know you have too, but I think dispersing people from a workforce perspective overnight and disrupting their daily operations, whether those are legitimate operations or not, probably caused that. People started leaving companies. Nobody had anything written down, and now all this fraud is probably starting to come up. So I can only imagine that question of what causes business fraud has been exponentially increased over the last couple of years due to the nature of business right now. Would you agree with that?
Oh, absolutely. And I too, Paul, have seen an uptick in fraud cases that I've investigated. And so generally what I'm seeing and what causes, there's a couple of different things that we look at. Personal greed is one where, someone just, they feel like, they're greedy, they have the wheeler dealer type attitude, and they're going to commit fraud within your organization. Sometimes it's the lifestyle of someone that they're trying to maintain a habit. They may be supporting a gambling habit or have some sort of an addiction, and they need a means to fund that addiction or that habit. Sometimes fraud occurs because an employee may just want revenge against their employer. They may feel that they're not treated properly or they're not compensated enough, and they will commit fraud through just a revenge type mentality. But, you make a good point. All companies are vulnerable to fraud. So there is not a foolproof measure that you can take to mitigate the fraud, because everyone's vulnerable. I've heard the rule that 1/3 of the workforce would never, ever commit fraud. I've heard also that 1/3 would commit fraud if they thought that they could get away with it. And then 1/3 would do it regardless. So we do have a mix of people within the workforce, and depending on the circumstances, COVID being a great example, where there are less controls in place, there's more opportunity available, but everyone's vulnerable.
Want to receive a monthly newsletter with Wrap topics?
Then head on over to warrenaverett.com/the wrap and subscribe to our email list to have it delivered right to your inbox.
Now, back to the show.
And I would also say, to piggyback off that just a little bit, business owners that are sitting out there listening to this going, Susie, and I really apologize to anybody named Susie, because every time I use a fraud case, it's usually Susie's doing something. I probably need to use like Tim or Scott, but Susie has been with me for 30 years. There's no way she could be doing that, right? How many times have you heard that statement said? Or even when you find something or you bring something to somebody's attention that may not be a direct allegation, but it may be, look, this is abnormal. We really need to have this discussion. They're like, oh, it's Susie's not going to be doing that to me. That has to be part of your daily discussions with folks.
It is. And it's trust. I mean, you can have trusted longtime employees, but I always, the adage of trust but verify. If people realize that, yes, you do place a lot of trust in employees, because you can't be in all places at once. So you do have that level of trust, but sometimes the trust is abused. And so a lot of cases that I've seen, that is in fact what happens is they've trusted this employee. They never expected that this employee would do something like that. And then they're, upset about it afterwards. So, we'll go over some good advice later of what, you can do as a business owner just to make sure that you are monitoring, that you do have some mitigating controls in place, but you can't have a full safe, segregation of duties or full safe plan to prevent fraud, but you definitely can have some things in place that help reduce the risk of fraud.
And Tammy, Paul touched on this, that of course there are controls that are necessary that will help businesses prevent, but also help them detect fraud, right? Because most of the time when we find out about fraud, it's been going on for quite some time. And that's, again, kind of the track record of fraudsters, as you refer to them, is, they maybe do it for some reason and they get away with it. And then they get a little more bold and they go a little bigger and they start to do it longer. And then by the time we found it, you're into the 7 digits of dollars the company has been defrauded from. So if I'm a business owner listening to this and I'm having a panic attack because maybe I haven't had some of these controls in place, what are some things that I can start doing today that will help me prevent and also help me detect if there is fraud going on?
That's a great question, Kim. And there's a couple of things that as a business owner, you can do. I'm going to say the first thing is just, reviewing your internal controls, making sure the functions that you have going on, that there's proper segregation of accounting duties. And what that means is just making sure that one person doesn't have complete control of a transaction cycle from the initiation, all the way to the record keeping. So authorization is separate from someone who has custody of records from someone who is doing record keeping. And we can go back to the example, the payroll was one of the frauds that I deal with, and looking at segregation of accounting duties in the payroll system, separating hiring and setting up employees in the pay, in your system, keep that separate from someone who is actually processing the payroll. And then once payroll is processed, just making sure that there are some review and approval steps going on, and then reconciling the bank accounts, and make sure that there's different people involved in those steps of the payroll cycle. So understanding your transaction cycle and making sure that there's not one person really has control from start to finish. So that's just, segregation of accounting duties. Second is just know your employees. If you hire employees, and this is a great time when you're hiring new employees, is do a background check. If prior to hiring that employee, the employee, may have been convicted of fraud. They may have poor credit. There may be something in their background that you really don't want to be part of your organization. It may be a motivation for them once they do become an employee to commit fraud. So know your employees. And of course, third would be just maintaining internal controls. I know we've talked about the segregation of duties, but understanding what procedures do you have in place, and are those procedures being followed? You may have some great procedures, but if they're not being followed, then it's not a good thing. And probably the most important is education, understanding, what are some red flags? What are some risks? Where are the, in the different transaction cycles, how could fraud occur? And then training on that. Everybody within an organization has a role to help, reduce fraud. And so education to your employees and understanding what those red flags are is important.
those are really good points, Tammy. One of the things that I do when I go out to companies, and you talked about it at the beginning of this episode, of having that heightened sense of awareness, right? So when I go to an organization, the first thing I do, I do a parking lot audit, right? I'm checking out what's out there. And if something sticks out, and I'm no offense to any Maserati owners, but if I go to a parking lot and I see a Maserati that is not parked in the president's spot or the CFO spot, I'm going to ask, hey, I'm a car guy. That's an awesome car. Whose is that? I'd love to talk to that person. When I find out that's the AP clerk, right? That's my cue. And I'm already, again, I think you've done this so much, and I get accused of this a lot, is I bring Chicken Little to the conversation a lot and say, I suspect things before they happen, but it's because you've seen it so much and you can't not see it.
Oh, absolutely. I agree. The lifestyle doesn't make sense based on the position that the person is, working in. Lifestyle is big. If
Right.
all of a sudden, there's a couple of things, lifestyle, it could be a change in behavior. This person may have had, a pretty even killed, behavior, but then all of a sudden they become very controlling, or something that just doesn't feel right. There may be something going on. It may not be fraud, but it could be that, that they're committing fraud and you're just starting to find the tip of it. So those are very good points, Paul.
So some business operations, kind of put their company in a position that subjects them obviously to a higher risk. You've kind of talked about that a little bit. In your experience and what you've seen, what can companies do to really minimize that risk of business fraud? Again, not take it completely away, but if you don't open yourself up to that susceptibility, maybe it helps kind of go forward. So what are your thoughts on that?
There's a couple of things that, the companies can do is, one, if you have an expense policy where you're reimbursing it, just make sure that you have a good a review and approval process. Make sure that someone's reviewing the details and that the expenses are being approved properly. If you have, company credit cards, we really try and stay away from company credit cards, because that is an area where we have seen a lot of abuse. So just avoid company credit cards. If you have something that you need to, purchase, then have the company purchase it, on your behalf. But so no company credit cards, if at all possible. Surprise bookkeeper audits is good. Make sure that you on a periodic basis are reviewing stuff. It makes the person know that their work is going to be looked at. Reviewing bank statements. I think that is a huge thing that someone can do. Is the bank statement will show anything that may stick out as unusual. And as a business owner, that's an easily once a month type thing. You know what the nature of your business is. You could easily tell if there is something that sticks out. And another thing is sometimes companies have, advanced accounting systems. And if you're lucky to have an advanced accounting system, use the system, to detect, fraud. Maybe you have some parameters set in your payroll system. Anyone that's, a paycheck that goes over a certain threshold, say it's a 10% increase in the pay from previously, then, it'll flag it. And so the controller or a business owner, someone can actually review those indications that something is unusual. So it's like a red flag in that system. So, those are like simple things that you can do to minimize the risk in your business for fraud.
And I want to also relate all of our listeners back to episode 26. We talked a little bit about controls improvement for companies, and that was a very similar discussion. A lot of the same things. You mentioned bank reconciliations, and I would say that I could guess that 100% of your fraud cases where there was fraud, I bet there was a bank reconciliation that wasn't done over a month old. Right.
Correct.
That's a quick indicator. If I've asked for a bank reconciliation and it's been more than a month and I still don't have it, there's a reason.
That is correct.
Right?
Yes.
So, Tammy, we've covered a lot of things for our listeners today, and we always try to wrap it up in 60 seconds or less on these episodes. So what do you want to leave the listeners with today? What are some specific things that you want them to walk away remembering?
Probably the most important thing is just to monitor. You may not have enough money and systems in place to have full control over your accounting or business systems, but monitor. I think sometimes perception is enough. If someone thinks that you're reviewing their work, then they may not be as eager to commit fraud. But monitor, even if you have the most trusted employees, monitor, because it will let them know that their work will be looked at. So monitor would be my best advice.
Tammy, enjoyed the conversation. Thank you for being with us today. I think this was a good discussion.
Thank you.
Yeah, it was great. Thank you so much, Tammy.
You're welcome. Thank you.
And that's a wrap. If you're enjoying the podcast, please leave a review on your streaming platform.
To check out more episodes, subscribe to the podcast series or make a suggestion of other topics you want to hear.
Visit us at warrenaverett.com/the wrap.